JC Parets with us of All Star Charts, the president and founder, of course. And JC's been tracking, of course, trends both globally as well as here in India. So we're excited to actually get his view today. JC, thanks for being with us. Now, April and May have been strong seasonal months for the Dow. Do you believe that the upside will continue? How's the market breadth looking like to you?
So that's a great question. So in terms of seasonality and what the market is, historically tends to do during a specific time of the year, we pay more attention when the market ignores those particular trends. So for example, the U.S. stock market tends to do well from the months of November through April. And then you hear, sell in May and go away. But that's not really what it means. It means that in May, we want to look back to the period that historically is a positive period and ask ourselves, okay, did stocks do well or did they do poorly? And we're basically right where we started. So they were kind of flat. So we take seasonality as, the market wasn't that great when it was supposed to be. So how do we look at that moving forward? I think we need to put it in the context of everything else, right? That's just one tool. And if we're going to prioritize what are some of our most important tools, I really wouldn't put seasonality near the top, right? It would be a supplement way down the list. The way that I look at market breadth is, this is a market of stocks. And what we're seeing is we're not getting as many new 52-week highs in terms of stocks like we saw at the beginning of 2018. Nowhere near that. But in terms of sectors, we want to look at the different sector groups. We want to look at technology breaking out to new all-time highs, consumer discretionaries breaking out to new all-time highs, utilities, real estate, all of them breaking out of these consolidations to new all-time highs. So we want to ask ourselves, all right, let's break down, forget the S&P and the Dow, let's just look at what's inside of it and look at the sectors and how are these sectors resolving their consolidations? Are they resolving them lower or are they resolving them higher? And we continue to see more and more sectors resolving higher, which leads me to believe that ultimately the Dow Jones Industrial Average and S&P 500 will follow, right? Ultimately, the indexes follow the components that are leading it higher. If we were seeing more and more sectors breaking down to new lows, resolving these consolidations lower, then I would argue that the higher probability is that the S&P 500 does the same. But that's not what we're seeing. We're seeing more sectors. So what we want to see is if and when the S&P breaks out above the January highs and the early October highs, ultimately, if we have cleared all that, we really want to see an expansion of actual stocks participating in that expansion, essentially confirming that. And I do believe we get it.
Awesome. So JC, just to also touch upon India now, the Nifty has not been able to convincingly break above 11,760, while the Nifty Bank has recently underperformed. What's the sense you're getting for the frontline indices, given that May has been a positive month historically? And I know you said not to go by that, but what's your sense?
It's hard to argue against all-time highs. And if we're making all-time highs, which we are making in Bank Nifty, and we are making in Nifty 50, or we're close. We haven't yet officially broken out, like you said, but I think it's a consolidation worth paying attention to. If we're able to break out to new highs, that is the market proving to us that the amount of supply that clearly had been there before, that was overwhelming the demand, has now been absorbed by those buyers, and prices can now move on. It hasn't proven that. But if we look to Bank Nifty as a leading indicator, which it has been a very good one, strength not just in the Bank Nifty compared to the rest of Indian stocks, but around the world. When you compare bank stocks around the world, Indian bank stocks are the ones doing the best. I mean, European bank stocks are the ones doing the worst, but what else is new, right? But when we look at a leading indicator like Bank Nifty has been, I tend to believe that the Nifty 50 will also continue higher, and we have a target near 12,800 in Nifty 50, and in Bank Nifty more closer to 35,000 for Bank Nifty.
So importantly, JC, tell us which are the sectors and stocks that you think will outperform going forward?
It's hard to argue with the strength in the IT stocks, right? Both on a relative basis and, when you have the biggest component like TCS leading the way, I like both the relative strength and the leadership groups. Like we mentioned in the U.S. stock market, we want to be paying attention to the leaders, not really looking to dig down to the ones that aren't performing, especially if the indexes are pushing up against new highs. So I like TCS. I like this breakout a lot. I think it's for real. Just to give you the exact level, it's about 2050 is the exact level on the risk side. So if we are above 2050 in TCS, I think we could be very long with a target near 2,700. So I think that's tremendous upside, over 30% of upside with very well-defined risk, because if we're not above those former highs, near that 2050, it doesn't make sense to be long. So it's nice to have a key risk level that we could look to and be like, okay, if we're not above that level, then there's no reason to be long the stock. Us as investors have the ability to do that. Some of the largest institutions in the world can't be that nimble, but we can. So, with that amount of upside, with fixed risk in a leading sector, I like TCS.
All right, so you like IT and particularly TCS. Now, similarly, tell us, which are the sectors that you're watching out for on the downside?
I think the public services, banks, right? The PSU banks, when you look at Bank Nifty, what it's doing, the PSU banks just are not. So I think if we're going to stay away from any group, it's almost like we look at that as almost like a subgroup, because they just look very differently than Bank Nifty. I think if we're going to be in financials and we're going to be in financial services or in the banks, I think we stick with those stocks and stay away from the PSU banks. I think that makes the most sense.
Fair point. Tell us, what were some of the highlights from the recently concluded India-focused call? Any observations in particular?
So for our clients at allstarcharts.com, you can go to india.allstarcharts.com for all of our India analytics. And we do a monthly conference call with our clients where I basically sit there for an hour and we look at all of the indexes around the world, all of the individual sectors, and then ultimately the stocks themselves. But what really stood out, I thought, in this particular call was actually what we were seeing internationally, right? More of the global market complex continuing to improve. And then India just being a leader, right? India continues to be the first one making new highs, right? It bottomed in months before the S&P 500 bottomed in the fourth quarter. Just seeing that leadership group, I think the rest of the world watching India continue to drive stocks all over the world higher, right? Essentially driving the bus higher. I think based on what we're seeing around the world, other countries should continue to participate, and we are seeing more and more countries participating. It's not just India. It's not just the S&P 500 pushing up against new highs. We've seen rotations into some of the worst areas in the world, like European banks. Even energy stocks are catching a bid. So seeing that sort of rotation, the way I learned it was that sector rotation is the lifeblood of any bull market, and we're seeing that.
Okay, fair point. Some weakness, though, JC, has been seen in oil after it retraced back to $61.8 level from the previous fall. Do you think the rally is over?
Yeah, when you look at it priced in US dollars, there's trouble in the upper 60s because that was support before it ultimately, collapsed, right? So, we're essentially back to where things originally started falling apart. So there's still overhead supply. So yeah, I think you're right. I think for right now, the mid to high 60s is going to be a ceiling. I don't see why that's most, in my opinion, that's most likely the case for the next several months. We could talk about crude oil going higher maybe as like a late third quarter or fourth quarter story. But right now, there's way better places to be.
JC, are you convinced, that the dollar index, which has broken out decisively above 97.5 handle, or is this just one of those kind of failed breakouts? At the same time, what's the euro chart telling you?
I don't believe that this is a dollar breakout at all. And I could be proven wrong any minute now, right? Because currency Forex trades all night and all day. So I could be proven wrong as I'm speaking right now. The market never surprises me. But I have seen this story so many times where you have, very clear overhead supply, and people think it's a big breakout. Everybody believes it. And then it just falls apart. We saw it in the U.S. stock market at the beginning of October. So it wouldn't surprise me one bit if the dollar absolutely collapses from here and the euro is set up to do the same. And then also, we look at a lot of sentiment data, and right now the sentiment is very skewed bullish towards the United States dollar and very bearish against the euro. So I think that those are some extremes in sentiment that we need to be careful with. And then also the commercial hedgers, we're seeing the smart money buying Canadian dollars, buying Aussie dollars. So seeing that, natural resource, commodity focused currencies doing well, if the commercial hedgers are right, and they tend to be when they're buying this much, that's most likely happening in an environment that the US dollar is falling. So to your point, you mentioned 97.5, just to give it room, let's call it 98. If the dollar's below 98, I think we need to be making decisions to benefit from a weaker dollar. Things like maybe precious metals or euro, or having it in mind as part of the game plan when we're making decisions. Think about how we can benefit from a weaker dollar. I think that's the case if we're below 98.
Fair enough. And what about the currency? The Indian rupee is at a fairly crucial juncture. We're near the 100 and 200 DMA. Where are we headed on that one?
So for Indian rupee, I think can do very, very well if the US dollar falls apart, especially. The emerging markets tend to be much more sensitive to dollar movements. I think that it's part of that US dollar conversation, I think. I think it's part of the just general emerging market story. And, it's interesting because India, obviously, as we know, is not really focused on commodities. It's more of an IT-centric economy, and the banks, of course. But from a behavioral standpoint, and I speak to the buy-side fund managers every day, so I see it. From a behavioral standpoint, they're allocating to the emerging markets together, regardless of the fact that the economies in India or versus Brazil, for example, vastly different economies. But when it comes to investing dollars, they tend to do that together. We see that, and I think that in the currency world, what we expect to see over the next coming quarters, if we're right on that weaker dollar, again, if the dollar rips through 98, I think rupee's probably going to struggle with some of the others as well. But if we're right on a weaker dollar over the coming months and quarters, I think rupee should continue to do well.
Okay, thanks very much, JC, for joining in. From the currency to levels on the Nifty sectors that you like.